Here we have a nice example of an H4 hybrid. So here we have our higher selection time frame, being the daily, of course, and you can see that we have reason to believe that we are in a trend. And of course, while we were evaluating the conditions for a setup for the hybrid, we were in a phase two. Now, today's candle is obviously showing that the market has progressed somewhat since then. But whilst we were evaluating our higher time frame selection criteria, we had reason to believe we were in this retracement wave or phase two wave of a potential trend. Now, this higher time frame from the selection criteria point of view, we've both got a breakout of our HTC channel. And for those folks who are pattern traders, we have got a potential class 1W pattern setting up here. And that's really what you're looking for if you're a pattern trader for the hybrid. So this phase two wave dropping down to the lower time frame then looks like that. And here you can see we had somewhat messy, but nevertheless bearish cyclicity for the last day or two. That bearish cyclicity broke down. Let's have a look at that. Yeah, so pretty much midnight last night. And our trade manager picked that up. It's a class 3 W pattern here on this time frame, as you can see. And as soon as we had this low ringed, with that meant that we had that breakdown in the bearish cyclicity at the end of this candle, which of course ringed that prior low. And it was at the open of the following candle, which was at 4 a.m. this morning, that the trade manager jumped into a trade here with our initial entry there, and of course the initial stop below the preceding swing low. So we don't worry so much about the ATR stop here, but normally with the hybrid, we tend to get very tight stops, very tight entries. That's one of the reasons why the stop tends to be quite vulnerable right at the beginning, and we have a lower success ratio on the strategy. But that being said, you can see that the take profit on this is quite substantial because on the H4 impulse, we are using the weekly ATR for a standard target. And of course, if you're using advanced targeting, then you wouldn't be going for any kind of a take profit at all. And in fact, we don't have that either. I've just got that line there for illustrative purposes. All right, so that's the selection and timing. Management of this trade, obviously we haven't yet been able to trail the stop using the 3-6 rule thanks to this little bearish candle that we had. Had we not had that, of course, the stop would have already been trailed here. But we need to just bide our time a little bit longer now before we can actually reduce the open risk on this one. But regardless of that, we, as I say, on this particular one, we're going to be using an advanced target on this, and let's just see how far it does go. But in terms of how to evaluate your higher and selection time frame and your execution time frame for a hybrid strategy, this is a very nice example.